Good evening and welcome to the end of day review for Friday. It's April 26, 2024. We do on Saturday because Friday yesterday we did do the recording, but for some technical issue we cannot publish, so we just redo the video for today. Alright, so we did have the GDP data release. The markets really went down, and then after the strong earning from tech company, it really reversed. So that's what we interpret. That's what we interpret. We interpret how markets, how the price action moving. That's our guess right there. But who know? Because the person who run the algo know exactly the reason, but it's all speculation right here. That the tech earning, earning huge right here. Look at this, at the end of Thursday, right? The Thursday already reversal after the GDP data very bad, but it managed to reversal. It create double bottom. You would say the bottom or head and shoulder right here. And look at this candle, it's huge. It's the last candle to close out for Thursday. And it's 52 point right there. That's huge. All right, let's look to see what is by the way, we are in week 17, so but now it's jumped to week 18, which is next week right there. We already have the GDP data release, and the next thing we're looking for is the Fed meeting. Fed meeting. Fed meeting on next Tuesday and Wednesday. It's going to be a huge week. Whether the Fed going to leave the interest unchanged or they're going to cut it, we don't think they're going to raise it too much for them. But never know, things happen. And then we're going to have a non-farm payroll on May the 3rd, which is the first Friday of the month. First Friday of every month, we have a non-farm payroll. Last time is April 5th. And next time going to be June in next month, June the 7th. That's a non-farm payroll right there. And now and then go back to the CPI data, which is the second week. This time gonna be May 15. Wow, May 15. Yeah, the second Tuesday. Oh, the third. Oh, okay. The third Wednesday. Oh, okay. Third Wednesday. Third Wednesday. The third Wednesday. April 10. April 10. Oh. So the second. Oh. So this week it does not count. So it's the second. It's the 15th. Wow. Okay. So this week it count into April, I guess. That's how it works. But anyway, let's look at IC profile. This is the closest profile we can see. Because this week is a bye week, so it's Monday is reversal, and then Tuesday it continue the uptrend. And Wednesday it cut reverse retracement, retracement, and then Thursday it expansion. It do a little bit, not a little bit, but a deep reversal. I mean a deep retracement on Wednesday turn into a reversal down move, and then Thursday it's reversal back, and Friday it's continue the trend right there. So if we look on the daily time frame right here is the bi-week Friday right there. You see that? Man, look at the move on Monday, and then a huge move up on Tuesday and Wednesday, create a high of the week and then retracement. But thing happened. We thought that it's going to went down from the Thursday, but it retraced very deep. It's almost become a reversal right at the open, around the open of Monday. See that? Almost. And then a reversal, expansion up. And Friday is a very dozy candle right there. We almost thought they're going to hit right there. We did go long, and we thought they're going to go up here, but it did not happen. We don't know now. We don't know why. The people who run the algo have a control. They don't want to buy, go there, yes. Because actually it have a huge gap. I mean, you have a gap right there. You see that? The gap. It's a have a gap right there. We thought they're going to hit that, but let's see. Next week it may hit. And it also have a gap right here also. It's a huge displacement down right here. Yeah. And remember right here, we have the break up the level. Later on we see this is the signal candle for right there. You had a displacement up, break the level, and you have displacement down, break the level, and it displacement up again, break the level, but not really huge, big at all. And then you have two doji candle hang above that level. That is signal to go short them. Don't go long. We learned the lesson. This is a moment. The moment exactly to go short. Because it close above here just to what? To create a false breakout. It's not going to be breakout. We could close above, right? Whoever trade a breakout, we jump in. Say, wow, it's so bullish. It close above the level. It just retest and close above so we can go long. That is exactly the moment we put a sell stop right here. If we go, it break it out, and when it break it out, break out first time, second time, then it also retests before going down hard. You see that? It retests one more time. This is also trick at a signal candle for to go short also. Yeah, now we see. Yep. If we would buy it right here to go long, if we never execute, then we never get a trade. But at the same time, we need to put a sell right here, or at least half of the candle. We sell them. But remember this signature just above or below the breakout level right there. We will go to that for today, for the review today, because we see it's everywhere. Alright, that's the weekly profile right there. And now we go here. Very interesting. The model 2.1 ICT, which is the prior 930 Euro swing, or so-called London rate right here, right? Exactly layout today. today we mean Friday. So exactly play out today for Friday. You see the Judah swing is the London right here from 2 to 5, and the swing in this case is swing low, but it did swing high also, and also it's swing low, and then it make another expansive move right there. We just took the trade right here, but we do a paper trade because we're not sure if it's gonna work, because we see this movie before, so we thought it should break out, but we haven't tried it. We saw that we haven't tried ourselves, and also we didn't recognize a Judah swing before 9:30. We didn't recognize that. If we review this before, then we know that's a ICT. We will check it in a real account right there, but we just do the paper account for the first trade. However, then we go in, we check 2 long trade right here. Right, the first long trade we check right here based on the breakout level signature we see. Break up our level, and that is break back, and then we see a doji candle, open and close below the level right here, the Friday open, and retest level. Then we know this is a fall breakout, and we put a buy stop right here. It did carry into the trade, and it go move here. It get about how many points we get up here? Yeah, 10 points. $500 right there, and we debate to ourselves whether we get 6 out or not, but we decide not to, because we want 15 points there, 1 to 3, right? But the market in this case offer us only 1 to 2, but we didn't take it the profits, so we take a loss. We move our stop loss, we minimize the loss. Instead of lost 5 points, I think we lost only half of that. And then right here we go long again. I believe, right here we go long again. But we move the stop loss a little bit too tight. We stop out right here, and then we go long again right here. And then we catch this move. This move is not give us what we want with the 3R. It only gives us around 2R, and we get out, and this candle we get out. So we recover all the loss from the 2 trade. And then right here we did take a long right here, and this they put back to dip. We put our stop loss right below this one. When we put the long right here, we put the buy stop in here. It put back a little bit dip, then it kick out. So we take a lot right there. Basically, we gain 1R, and we get back right here. So we come out, almost break even, $25, gain right there. Not much, but actually it's but it's still a green day for us. So far this week we trade on Monday, Thursday, and Friday, and all 3 days we are green. So that's good right there. And we almost there into our challenge right there. So let's go see why. Let's look at the. By the way, and on Friday we have a little bit issue with our system, so the recording is not completely 100. 6 hours and 30 minutes. It's just 1 hour. We got some issue, and you see right here. Yes, so right here we saw the move, right? We saw it break out the low right here, and that's exactly we would the buy stop right there. If we break it out and it continue to go down, then we will never get in the trade. But when it come back there, it come back to broke it, to create a fall breakout, not real breakout. Yes, so we intermediately mark the level and we put a buy stop in. Yep. So actually a little bit too late for us to put the buy stop order, so we do the market order right there. And we get carried into the trade. And we aim for what? We aim for 531, 51.31, and we did hit that target. We see that it hit the target, and we have a handsome profit at that point, 500 something, right? Which is 10 point. You have 1 point is $50, so 10 point is 500. Let's see. I think we got more than 10 point. Yes. So we got 15 point, which is $700, $750 right there. However, we only take that in paper trade account, like the reason we say before. We're not sure, but if we check the ICT setup, we saw that, then we should, and we see that we could take it in the real account right there. So that's the lesson for us right there. We need more practice, so it's become our second nature. It's forming, even though we saw it before it's forming. We're not there yet, so we work our way to that goal. Yep. Yeah, and the rest, we have a little bit problem with our recording right there. So we need to check that setup right now, and let's look the note. So that is the ICT right there. ICT model 211. It prior night, 9:30 London rate right there. We need to watch for that setup from now on. It either rate upside or the downside, or the buy side liquidity or sell side liquidity right there. And this case is amazing. In rate the buy side first, and we or everyone thought gonna be come down, right? If he have a huge gap right here, need to refill the gap, but it did not. The people who run, the program did not let it come down. So it's a 4 breakout right here. Euro swing. It's a buy stop at the low right here. At 51.12.25 right there. And entry there. So we have a nice run. If we go in right here and we target, just the buy side liquidity right here. We got it. Very precisely, so you're gonna take this buy side liquidity. What the buy side liquidity of that candle? Let's take a look. So the buy side liquidity here, it hit target at 11 exactly, and the buy side for this, or the high for this buy side or high right there, is 51.40.25. So if we are going right here, and we target 51 right there. Yeah, we reached our target right there. 15 point. It's 27 point for that matter. And let's see how much we reach. Yeah, good. We reached around 5 point. That's our normally 1 hour right there. We reached 5 point to get 15 point. So 1 to 3 reach to ratio. That's our risk reward ratio for now. Yep. Yeah, 1 to 3 risk reward ratio. Actually, in this case, it's 1 to 5. Yeah. Then let's do a little bit edit on that. So basically, it's our target. Yep. What's really? All right, and we have a risk reward ratio of 1 to 5, 27 to 1 to 5. Very decent risk reward ratio right there. That's the target. We entry right here, and that's the target. Let's save it for now. Yeah, I mean, just focus on this setup. We saw it every week. Just cast that trade. We got 5 hour right there, and 1 hour is 250. 5 hour then 250 times 5 hour is 1,000, more than 1,000. 4 hour we have 1,000, $1,250 right there, and our goal is 3,000, right? Then just 2 trade right there, 3 trade there, we reach our we passed our challenge right there. So basically on Friday, we take 4 trade and 3 loss and 1 win, and we come out still break even, or you can say that it's still green day, $25. But here's how we our journey so far, right? So our target to pass the challenge from the top step is we just 50,000 challenge right there. We would reach 3,000, right? 53. Right now we 51 something. Yeah, right now we accumulate 51. We make profits 50, so 1,238 something. We have almost halfway, and we still have 3 more weeks, so we're good. We only do 3 days. Sorry, 1, 2, 3 right there. The first day really a big profit, and yeah, we're 1,100, and the next day was $65, and the next day we have $7 something. Yeah, $7. Yep. And our average, the win rate is very low, 38%. But the good thing that we stay green because our average win is bigger than the average losing. So which is a good thing right there. So let's see how next week the market's gonna give to us. But we always be grateful. Either small win or small loss. loss is part of the game. So we need to accept that. Don't try to avoid that, because if we try to fight that, we're afraid to lose, we will not check the trade, and we stay very impatient. So be patient and wait for opportunities to come. And okay, right here we see the way is, we used to be fall into this trap a lot, but now, because we make mistake, and that's where we learn. We used to do like this. When we see that it's breakdown lead level, in this case it's lead level, the open Friday, I take look. Let's give it a little bit color so it's easy to draw our attention to. Look at this level. Okay. Make it a little bit bigger. So what do we see from that level? The open on Friday, right? It break that level with a very decisive, right? A displacement up right there, and immediately it broke it back, and then this is the signal candle right here. It's open below that level, and then it retest and fell and closed below. So if we are a novice trader, we used to be, and we still now, but we learn. We thought that, wow, it break it out and it fell, so we go in and short them. That is exactly the moment that it's break it up. It's a fall breakout right here. If force create a sense of break it down, but it did not. And this candle, when we watch in the real time, because our recording is broken on Friday, have some issue. Otherwise, we watch replay in the real time. You can see this candle is huge. We thought it's gonna explode into the level that on because we get into that trade. We did put our buy stop right here, and it follow it's get out into the trade, and we're so happy. We're excited. We thought, wow, we discovered a secret right there. It did, but because of the Friday, so they stopped. The algo stopped right away when it rate this buy side, and at the 11 hour, they stopped right away. They stopped the buy program right away, and then they let it drop, and then they bought it back. They bring it back. At the moment we go in right here, we thought that it's gonna be huge trade for us, but we learn our lesson, and that's the beauty of the market. We cannot control it. We have to go with the flow. Okay, so when at that moment we look on the daily, we thought that, wow, we're gonna hit the level for sure. Just few more points, right? Is that right? What's the high of this one? 51.46. Yeah, only 4 more points. Well, we thought it gonna hit that, but it did not. It did not hit. It's the algo put it back right away. And like we say earlier, we move our stop loss right here. Did we not? Yeah, we will stop closer here because we hope that it's gonna be bounce back, but it did. Got stop out, take a small lot. I think about 200, half an hour right there. So 200 something, half an hour right there. And then right here we go long again. We go long again. Is that right? Yeah, we go long again right here, and we got to stop out here because we put a stop loss a little bit tight on this candle. Yeah, we got stop out at this candle, and then we re-enter again. So that's the whole idea right there. And but we come out with the break-even day. We have it, but the point we try to make is that when we see the break it up and break it out, and then this is a signal candle right there, then we can go long. The same right here, break it out, right, break up, break it out, and you see this signal candle right here, open and close below, test and fail. That's where we need to buy stop right there, and exactly it happened right here. But this way, a little bit tricky. So we learn our lesson when we go in with that candle, that we go in, put a stop loss below the low of that candle, and we have to sit through the volatility, the pullback, in order to reach our target. Otherwise, we will get stop out and re-enter again, and we have to pay for the transaction cost right there. That's the lesson we learn. And look at look for all signal candle right there. The same idea that we mentioned earlier. We have a lot of time. Right here, this is the signal right there. In this case, the short entry. The shorts. The other example is the long, but the short right here. It break it up, break it out, break it up again, and close above. Look for the doji hang above the level. That's exactly where we need to go short right there. This guy give a 2 signal candle. Perfect right there. We go in a short. We saw this pattern everywhere, and we catch some of them. Let's take a look real quick. Yeah, we can saw on this example right here. You see this signal candle exactly happened. We forgot on that day, on Thursday. You see that? And this pullback candle is happened on the 11 hour. Very similar today, 11 hour right there. You see that? Man, the algo run the same routine or the same process or some sub-program right there. Exactly. You see at 11, and then this guy broke without level. We can trick this level or this level for that matter right here. It's also the key level also. So we can both buy stop right here, so we can get a better price than right here. But yeah, so difference is about how many points? Yeah, almost 2 point different right there. So get a better yield when we put right here. We have to learn put our stop loss. We make mistake right here. Put our stop loss, too tight. We put right here, we get kick out right there. When we read low, then we stay in the trade. But go back to the point we try to make is signal. This is signal candle right there. You see, it break out this level, Thursday open level at this level. Or we can mark this level also. It's another swing high right there. And you see that it break up, right? And then break it down, right, immediately. Not immediately, but about 2 candle. And you see this guy open and close below and retest level and fell. It looked like it's gonna break down, right? Or break down to the outside. That is the moment that the algo is flipped. So we have to put our buy stop right there. And this is the candle at 11. Oh, I guess it's not 11. This is at, we misspoke. 11 is right here. This one, I think, so it's 30, 15, 14, 15. That's a retracement right there. Beautiful. So it's expansion, retracement, expansion, retracement, and expansion. That's the huge, model for us to see the this is the candle signal for too long. This is one of the example, and we catch a second example right here. The same idea. Right here. This is a 4-hour time frame, right? We can see if it any time frame. It's time is fractal. So right here you see this signal candle right there. Did you see this level, right? Is break down, break it back, break it down one more time. It's close completely displacement. We have to see displacement in order to, for it to valid. After displacement down, you're gonna see a doji candle, close and open and close below that level, and it's retest level and fell. That exactly moment we're gonna put a buy stop in. Well, if it continue to, if there are two scenarios. If it continue to break down, then it will never execute at our order, and we good. We never get in the trade. But if it come back to the level, it carry us into the trade. The only reason for it to come back and carry us into the trade is to break the level and expansion to that direction. Then we good. That is the idea, the model we want to working on. We want to working on a very precise, entry. So if we get into the trade, it only moves to our direction. And if we wrong very fast, and we minimize our loss also. So we wrong fast and wrong little. But if we right, we catch a big move. So that's the project or the model we're working on right there. And you remember, it's always retest. So we have to seek through. Here's another issue we need to work on right now. Is where we put our stop loss, which is allow us to stay in the trade longer in order to catch, hit our target. That's another issue that we're working on right now. We have to be patient for it to hit our target. We don't just micromanage our trade and keep moving stop loss. We will get kicked out easily when it have a pullback or a little bit, volatility. Then we got kicked out. We have to be patient. So the good idea is that put a stop loss below. In this case, it's the order block, right? So below the order block low right there. By the way, so we see this signal idea candle everywhere. It creates a 4 breakout right there. But if you trade the double bottom, you can see that this is a bottom pattern right there. And also, or head and shoulder. Here's the head, here's the shoulder right there. For other, people call head and shoulder. This is the second assemble, and we have a third assemble right here. Yeah, this trade is play. We did took this trade. It's break out the Friday open right there. So this is a signal candle. We follow this trade. However, this trade, when it take the sell side right here, our target should be the sell side. Because Friday, we not expect it to make a huge expansion move up. We did. We make mistake. We did. We thought it's gonna reach 50, 60 or something, 47 up here. But for Friday, it did not. We want to keep Friday. It's like a doji candle right there, and that's the reason why it come back. And we learn. We learn. So, but the whole idea that this signal candle right there. So look at this candle, right? It break it back the level right away after the candle at 10, broke that level. And then we have a signal candle at 10:30, which is open below and then close below. It's retest, open below, retest, and fell at that level and then close below. That's where we put. You see, in the real time, it's a down close candle. How come we put a buy stop right here, right? How come we go in and execute our trade? Because we want to break this level. If it continues to down close, then we never get into the trade. Then we're good. that means we're wrong and we never get in the trade. It may go back and retest one more time, but we have accept that. We don't need to be right all the time. We just need to write 50%, right? We want to write. If we're wrong, we want to wrong very little. We think we have a stop loss, tight stop loss, 1 hour. If we're wrong little, and we're wrong very fast. If really we're wrong and it's gonna, retest little, it's gonna come down very hard. And then we're wrong very fast. But if we're right, we'll catch a huge move. But in this case, the huge move that we have to determine the context. On Friday, it's gonna make a huge expansion, so our target should be this, buy sell liquid right there, the high right there. So that's the the model we try to work it on right now. And here's another model we're working on, is a reversal model right here. Basically, we saw this on the 4-hour time frame on last Friday, and then start on Monday. You see the retracement on Monday, and then reversal right there. And we see that right here. The same idea. In this case, we have a signal candle right there. It's a signal candle. You see, you mark down this level. So when it breaks down this level, this candle become an order block right there. Order block, and this is a proportion block. That's I think ICT called proportion blocks. We could be wrong, but we remember that's he called proportion blocks right there, which is basically overlap with order block right there. And the low of these two candles will never violate. So if we put our stop loss right there, we still in a trade. And whenever we see the huge down move, and then it form a double bottom or head and shoulder. In this case, we call head and shoulder right there. Instead of model 1 right there, which is it form a head and shoulder a pattern. Then the expansion move up very huge. So we'll try to build this model now. So now in the future, if we see the model, we go in and we will stay. We stay until we cannot stay in anymore. Basically, we want to max out the run. Or another word, that we stay in the trade until we have no reason to stay in. So don't get out too early. We will leave money on the table. So because this pattern is very reliable. Before we say head and shoulder pattern, and we have no clue, but now with ICT knowledge and concept, we can see the mechanics behind that. It gives us more confidence that exactly how this pattern or this model work. You have a signal candle right here. A lot of people go in and short. Not a lot, maybe a lot for the newer novice trader. We usually should go in and short right here. And we might, because it's just our human nature right there. That's why we have to be stay nimble, be practice mindfulness to control our impulsive or our old cell right there. We try to build our new cells, let our old cell die, so we can rewire our brain right there. So in other words, right there. So that is the model 1 for reversal, which is form and head and shoulder pattern or double bottom pattern. And here's the model 2. This is a 4-hour, but if we do the intraday, it's happen around 11 hour or so. This is the model 2, which is the reversal. In this case, don't need a head and shoulder. It doesn't need a double bottom to retest one more time into this order block and create a proportion block. This case, the reversal right away. And how do we know that? We pair that with a time. We use time to to identify it or to detect it, to identify this reversal. So it's around 11ish. And also we have a smart money diversion. If we check with, in this case we trade the ES, then we check with the NASDAQ, the NQ. If we saw the diversion, then no doubt it's gonna be reversal. So we have high probability to check the trade. And you see that when it breaks the level, we leave a gap right there. Break down level with a gap, and then you have engulfing candle. Right, if we would buy stop right here, we can carry with the trade. But if we want a little confirmation, like the candle close, it engulf the candle, then for sure we go in right here. That's what exactly will happen on I think on Monday. We go in right here, but we exit at that level. We should let it run all the way because we don't know. We're still learning. But now we know that on the 4-hour time frame, right, it's from this pattern. That means the expansion move gonna be huge. We did go in right here, but we exit around here. We should let it run, and that's exactly what happened. So we learned a huge lesson later on Monday. But we take a good trade on Monday. We take profits around here about 1,000. Which is more than 15 point, 20 point right there. So it's more than 3R. It's still good for us, we just begin now. We're still learning. Yeah, so this is the second pattern. We see the reversal right there. So the first pattern is going to be head and shoulder for short. But when we look down detail, it's like the ICT concept. It will be an order block and a proportion block right there. And this guy is intraday reversal. We need the smart money diversion, and we need the time alignment. And we also want to see a fair value gap breakdown. Yeah, here's another, the model one, but it's intraday and it's around 11 right there. So that's which one we need the time alignment, and we need smart money diversion right here. We have smart money diversions happen around 10, which is with around its level. And in this case, it's model 1, right? So model 1 is everywhere. It's on a 4-hour time frame, and it's on intraday time frame. And intraday time frame is, if happen around 11, then perfect. You have smart money diversion, you have the time alignment, and then you have this pattern, head and shoulder, or the the order block, and then proportion block right here. You see that the idea is the same, right? You break it down and then break it back right here, 2 candle up close, and then it broken down again. That where you put the buy stop right there. In this case, we don't have the signal candle, but the time alignment, the intraday time alignment, the smart money give us a confidence. You don't see the signal candle right here. The perfect one is have a signal candle. Right? In this case, where's the signal candle? We don't. Yeah, in this case, the 4-hour time frame give us a lot of confirmation, and one of that is the signal candle right there, which is open and close and fell, and test, retest and fell that level. That's give us but this one we don't have that. We just have it close below that. It should be okay with buy stop right there. And we have by the way, we have an engulfing candle right there. You see the engulfing candle? It almost, it's not perfect. The other, it's not perfect engulfing like this one. The one you see that the candle completely take over this candle. But this candle is completely take over, but it still it not reach the low yet. So it's engulfing, but it's not perfect. But we can use other factor to evaluate and give us a better entry right there. So that two model we're working on right there. Just one model reversal, but two scenario right there. And the entry technique we're working on, and the stop loss where we want to put a stop loss. Yeah, you see when it broke out that level, it will never retest that level again. You see that? It never retest after this candle, huge candle move up, engulfing candle, it will never retest that level again. The same right here. You see the engulfing candle, it never retests again. So if we go in, we just provide stop below that level. We don't need to blow this, engulfing candle. So that's the phenomenon we see right there. Anyway, I think we run out of time for now, and thank you for your time and interest. We're only grateful for this opportunity, and we do what we love, then opportunities is coming our way. Bye for now, and have a great weekend.